Recording in progress. Morning, team.
Morning.
Morning.
How are we all?
Good mate, thank you.
Good, good,
What
good.
up?
Say again.
How was your thing, Check?
Good
Was it
man.
good?
Do you know who Peter Kay is? Here's the
No,
question.
I don't.
Peter Kay is like he's
Quant.
like the Richard Pryor of the UK.
Gotcha. Gotcha.
He's just like very like colloquial, like he's a northerner, so he's like it's really hard to give you a comparison. Yeah, he's kind of like, I mean, Richard Pryor's a bit more crass, I suppose, but he's like a very like family friendly comedian, very like observational comedy. He's like from the north, so that just makes him hilarious.
Nice.
I don't think we've got any northerners on, have we? No, I think yeah, everyone's down south here, aren't they? Yeah, so he's just brilliant, and he's just like you can go with your mum and your dad, which I did. My parents bought me the tickets for Christmas,
Nice.
and you could also take your son and have a great time, and it's like yeah, it's really hard to explain, but it's hilarious. It's hilarious.
Well, good. I'm
I'll
glad you.
send you some stuff later.
Yeah,
See
check him
if
out
Yeah,
you
on
can
for
get it.
YouTube.
sure.
Check him out on YouTube.
But yeah, he's pretty massive, and he's done a couple of like really famous like stand-up tours in the UK. Um, and like pretty much everyone in the UK knows like his jokes, doesn't he? Like everyone, is that just me or you Brits, help me out here. Everyone knows Peter Kay, right? Everyone knows his
Oh,
jokes.
Games,
Everyone knows PK.
one of
Everyone
my
knows
Everyone
Peter
knows
favourites.
Kay.
One
PK.
of my favourites.
And yeah, and it was just amazing. And he's very clearly been a bit poorly. So he had a tour in 2017 which was cancelled. And funny enough, I was doing a bit of research this morning, and it looks like he's had a stroke.
Hmm.
So he cancelled a tour in 2017, and he's not confirmed anything. But there's people that have been to see this tour who have like worked in like stroke units and stuff, and they said all of his mannerisms. He was like a little bit slower than normal, and his you could tell like he would be trying to catch up the punchline. He wasn't like in his prime, let's just put it that way. But it was just still such an amazing night, and he's just such a hilarious person. It was just yeah. If any of you get a chance to go in the UK, I'd highly recommend it because we looked last night. There's loads of tickets, like loads of tickets where people are I think haven't been able to turn up, and they're like resale tickets or something like that. So if you get a chance to go and you like Peter Kay, I'd recommend it because it feels like it might be his last tour. So if you're a fan, I'd definitely go and see it. But yeah, it was good fun. Good fun. How was everyone else's evening?
Yeah, I had a country gig last night.
Mm,
First
how did
country
that
gig.
go?
Yeah, it went surprisingly well. 25 songs I had to learn.
Wow.
So yeah, country's a bit different, but no,
Yeah,
it's great. It was
nice
all
man.
line dancing. So they had a lady that was this party. We were playing at the party and in a hall, and then they hired a line dancer teacher, and they were
Oh, cool.
teaching prior to when we went on stage. So there were people line dancing. It's just weird. Never seen it before, you
No
know.
way.
Just yeah, it was good. Good night.
Love that. Love that.
I'm
Nice.
still recovering, and I got to fly off to Italy this afternoon. So yeah, so I'm here though, ready for you.
Good man. Good man. No, I don't
So
think.
in the boot camp, I want you to you're going to go through the assignment, right? You're going to do that afterwards, right?
What do you mean by the assignment?
You set us some assignments, right?
Yeah, I said yeah. Set of coursework.
Okay, cool. Sorry, that's what I meant. Yeah. Okay, cool.
Yeah, so I'll
Yeah,
talk you through
in
it
the next meeting,
when we
don't
jump in. When we jump in, yeah. Okay, cool. So look, I don't think we're gonna obviously go through Euro USD this morning. I don't think it's gonna be particularly a busy session because I there wasn't really much to trade on Euro USD. Euro GBP was kind of the star of the show. I closed up my position on Friday here. As you can see, it absolutely flew down even further. It was Friday. I could have held a little bit on. To be fair, I set a take profit here, which got hit at like 4 o'clock, and I was on the motorway at the time. And I always think when you're busy and you're not able to actively manage a trade, having a hard stop loss is the right thing to do. What I would have done if I was able to is I would have had a hard stop loss somewhere down here, And then when price got down to here, I would have closed off like 90% of my position. So that would have been my kind of final target. I always have like an initial target where I take some profit off. I'm a big believer in that if you've got a winning trade, you need to do what you can to make sure it stays a winning trade. So always try and take some profit off regardless. I normally aim around 2R ideally. I have to have a minimum of 2R for my first profit target, but with trap entries, and you'll learn this, with trap entries, I always take a portion of profit off at the bottom of the trap. Can anyone tell me why? Can anyone tell me why we do that?
In case it reverses back up.
Yeah, yeah. Why would this trap? Why could this trap possibly reverse back up?
Demand area.
Corporations, the people with the big money trying to manipulate the market again, maybe.
Yeah, potentially, Joe.
I was going to say, is it where there's going to be it's a demand area and there's going to the liquidity sweep and then it can reverse?
Yeah, yeah, exactly. And Danny, I wasn't ignoring you. I just knew you knew the answer.
Oh yeah, for sure.
Yeah, exactly. So, supply and demand theory is you have supply zones and you have demand zones. And as price reaches these supply zones, it rejects. And as price reaches the demand zones, they reject. Okay. Now, supply and demand, the statistics that I've done on it, and I've done a lot of testing on this, and I've got stuff on my YouTube on this that you can go back and watch, is that 70% of the time supply and demand zones fail, which normally means 70% of the time this is the reaction that you will get. That does, however, mean that 30% of the time this is the reaction that you will get. So to not take profit off at the trap, you're basically asking yourself for trouble. Okay, you're asking yourself to be that one of those 3 in 10 times where the trap can actually hold and isn't actually a trap. It is a demand zone in this example. So supply is above and demand is below. Okay, the way to remember it is demand starts with a D, it's down. Okay, and supply, I mean, there's no easy way to remember it, it's just not down. So when price when price gets to the traps, I always take a chunk of profit off. One of the things you'll notice on a lot of my trades is you'll notice that I don't actually take profit off exactly at positions. So I don't take profit off exactly at the lows. I don't take profit off exactly at the trap. I always go a couple of pips before. Again, why? Why would I do that?
In case it reverses, right?
In case it reverses, yeah, exactly. And why might it reverse from there? And why is that more sensible than just going exactly to the pip? This is quite a technical one though. Remember, there's no wrong answers, guys. I mean, there are, but you won't be made feel bad if you are wrong.
Well, Chet, what I'm seeing is that whole sweep down right there is a whole demand area. So
Yeah.
it could reverse anywhere
Yeah,
inside
yeah,
that area.
you are right. So that entire section of price from that wick really, that entire section of price. Remember, we spoke very briefly, bootcamp people, about imbalances. Okay, that entire section of price is an imbalance, right? So any of this could have been the trap. That's the first thing, and that's why sometimes you'll get a tag here, then a rejection, then a tag here, and then a rejection, because it's buying pressure that is being injected into the marketplace. There's buy orders that are being executed, and that's causing the market to push up a little bit. So that's the first thing. The other thing is if you go exactly to the pip, your broker has what's called a spread, which is the difference between the position that you take and the position that you get. And that's how a lot of brokers make their money, on the difference. They make tiny, tiny amounts of money on the difference between the trade that you take and the trade that they give you. That's why if you look at a broker panel, you'll have like 2 lines, like a red and a blue line, really, really close together. It's called the spread. If, for example, price comes down to here and tags that perfectly, and so your bid line, I think it's the right way around, your bid line,
bids bottom, ask is top.
yeah, your bid line comes down and tags it perfectly, but your ask line is like half a pip above, and then it reverses.
Yeah.
Your trade won't get triggered. Your trade won't get executed. So I always go a little bit above, and then same thing. If I was trading the trap, I would take a little bit of profit off around here, not exactly at the low because I've got no guarantee it's going to do that. So I'll take it off. And then final positions like, oh, my GBP CAD position, final positions are ones that I will just hold because I'm agreeing that come rain or shine, That noise. I know. Can you hear that? That music.
Can't hear music.
Okay, good.
Hear things moving
Illusion,
around.
mate.
As long as you can't hear it, then the recording can't hear it. Yeah, so final targets I will hold, and I'm just because I'm basically saying, look, it's either going to hit my target or it's not going to hit my target. I'm accepting that. Normally by this point, I've only got like 10% left of my original position anyway. Okay.
My
So
question to you is, are you manually doing this though? Are you setting the pips? You're setting it.
final target is done automatically. So I set a take profit.
Yeah.
The other targets, like for example, in this trade, my TP1, for example, my TP1 there, that was manual. Okay, so I wait for price to get there and then I close like 60, 70, 80% of the position. It depends on, I don't really have a hard and fast rule on it. And there's an argument to say I probably should have, but it really depends on me on how this position is moving. So for example, the reason why this position is only 2.6, okay, 2.6. This position, I closed most of it off at TP1 because it was so corrective, right? It was taking a long time to get there. I missed this one. It then pulled back. And then I was like, right, when it gets back up to here, I'm going to be taking off almost all of my position. So it came back up here. I took off almost all of my position. It then, as you can see, it fucked about for another day. And then I was like, right, this isn't moving very well. Shock that happened just as I closed it. Okay, this isn't moving very well. So I'm going to set a hard target on an external liquidity level here to the left. That target was a firm target. So when that was triggered, that was the trade closed completely. I think I left 20% on or something like that. And that was the trade closed completely. My EURGBP position, however, was slightly different. So this one moved really, really well, as you can see. So my final target was down there, which obviously we didn't hit. I've taken my take profits off now, but my first profit target was at the SMT. This is a slightly different version of the trap. This is a, I don't want to overload you guys. So you have two versions in the strong money Forex strategy. You have two versions of a trap. You have what's called a smart money trap. And a smart money trap is a logical area where smart money traders, supply and demand traders would be buying from. Okay. For us, it's a illogical. That word?
Mhm.
Illogical, is it? Or unlogical?
Illogical.
Illogical. Okay, cool. It's an illogical area. That sounds horrible. It's not a logical area for us. Okay. And the reason why is because we are bearish. All the reasons that I explained in the video that I posted yesterday. We're bearish. We're expecting bearish market order flow to come back into the market. And ultimately, this is an area where it might look like to supply and demand traders a good area to take a buy from. But for us, because of the position that it's in, so very specifically, you couldn't have an SMT, for example, you couldn't have an SMT anywhere in here. You could only have an SMT after external liquidity has been taken on a really higher time frame, and we've had, that initial move back up. That quantifies it as an SMT because of its location. Okay, January bootcamp people, that might be a bit confusing you for now, but I promise you it will become clear. Okay. So you'll see this on my charts. You'll see SMTs. They're in certain locations. So you'd either have them right at the top of ranges or right at the bottom of ranges. Okay, and we're expecting price to blow through them. Or you'd have just a normal trap. You can have a normal trap anywhere in the marketplace. This is as a result of a false move. Okay, normal traps are created in January bootcamp. You're going to learn this today. Normal traps are created off the back of false moves. We spoke about on Thursday on Monday about order flow and those institutional moves. Okay. Anyone recognize that move that we spoke about on Tuesday? Very clear. Institutional move, sweep on liquidity. The momentum is bearish. As you can see, bearish momentum, nice clear bearish momentum. Then out of nowhere, you have this sweep. Okay. That's a very clear institutional move. Okay. You can tell it is the by the formation of the candles, how quickly it moved in and how quickly it rejected. So when you have these first breaks or false breaks, they have two names because it is either a first break or a false break. it leaves behind a trap. Okay. And these can be, you can find these anywhere. And this, again, I won't go into too much detail today, but this forms the foundation of the way that we trade. Everything that we do here at Strong Money Forex is formulated off a false break and a trap. Okay. We are looking for institutional plays where the institutions manipulate markets into fooling dumb money to trade the wrong way. And then the flip side of that is that we take the opposing position. So when me and Danny, 3 to 4 years ago, were buying this setup, because this is absolutely a setup that Danny and I would have bought,
Buying the shit out of it.
right? Okay. We'd have been buying here all day long when we were trading like SMC trading, probably longer than that, 5, 6 years ago, probably. When we were trading SMC and supply and demand, the Wyckoff and all that sort of stuff, we were looking at that position. We were classing that as a breaker structure, and we were then buying that position. Okay. This is effectively what we do. And this is why the strategy works so well, because everything that I failed at as a trader and every strategy I used that I failed at as a trader, I now physically target for my profits. I'm literally trading into the trader that I used to be. And that's how I went from being a losing trader, a loser, literally a loser,
Fucking loser.
to a winner. All right. Coming back to this position, the difference to this position to our GBP CAD position is the fact that it moves so quickly. Okay. There was no struggle. It moved so quickly. It got down to our first target, which is the SMT, and we took off 50% on that one. Then we took off another 50% or 60% of what was remaining, which left us with 20% in the position. So by the time that price came down here and then reversed on me, my 20% that was left, that was probably sat at around 0.5% or something like that, I lost that back to the market because unfortunately it came back and it took me out for break even. Okay. But this trade I managed differently to the other. That's just one of my personal preferences because of how quickly it moved. My expectation is that this would be the start of the big move. As you can see, the institutions weren't happy with that. They took one last push higher. They took more liquidity from the left. That liquidity, which was green, became red. Okay. And then ultimately price reversed on us. Okay, price reversed on us, and that's how I got into that trade on Friday. I did a full breakdown of this yesterday. I uploaded it to the announcement, so you can go and have a look at it in a bit more detail. But yeah, that's kind of just a little bit on my trade management. I'm not sure how you started on that, but I'm probably just rambling. Anyway, let's get into Euro USD. Let's have a look to see whether we had any good opportunities. Let's just open up a journal. Let's just go to our backtesting page and let's just, oh, I still need to put a trade in there. That was that trade from the, oh no, where is all my drawings gone? That's not good, is it? That's the wrong one, that's why. I haven't actually logged this trade. So that was the trade we logged on 21st. So this one was 4.79. Where would I have come out? I would have come out the trap, so I would have probably come out there, 3.67. So 3.67. A win, and that was just a MSU2. MSU2. So we're with momentum. We've had a key liquidity level, which was that liquidity level down there. We're at a key time of day because we're in the New York session at 2:30. We've had a 5-minute shift, which was on the lower time frame here. Okay, very clear shift. First break and then true break here. First break, true break. Mark that on. Let's just take a screenshot of that. Get rid of that line. Mark that one on. 1 minute, 5-minute MSU. So the MSU entry's there. The sweep was there. I do this quite a lot, guys. I'm really bad at marking up my charts, and I know that's really counterproductive for you as students. If you ever look at any of my positions or trades and you can't work out what my analysis is, please ask me. I really try and be better with it, but I'm pretty shit with it. Because I see my charts how I see them and it's so ingrained in here, I often don't do all the markings on that I know will really help you. And if I do ever forget and you can't understand my charts, please ask me. I won't be offended. Just send me a message saying, do you mind me just giving me a breakdown on this trade? Or do you mind me, can you put the annotations on this trade? Because I know it's really helpful for you guys. Often when I'm trading quickly or I will look at the markets and see what I need to see without marking it up. So apologies if you ever get confused. You're always welcome to reach out to me and I'll mark them up for you, okay? So this is our first break and our true break. That's our momentum shift after our liquidity sweep, which is down here. That was our liquidity sweep. It's a false break, okay? We know now it's a false break because the trap was then taken. We call it an FB because it could be a first break to continue down. So it could be the first break into continuing down, but it may also be the true break and continuing down. Sorry, it it's both the first break, which could indicate we're about to continue down, and it could also be the false break, which is a false sweep to go and then take the trap. The high, the high of whatever move that created the false break. So the high of the move that created the false break, okay, so this is the high that created that false break here. That becomes the trap, okay? That becomes the trap. So the trap's being created. I know, and you will learn, and these are some of the things you'll just need to trust me on until you've gathered your own data on it, and just trust that I've done the back testing on it, and people like Danny and Linny have done the back testing on it. So we've got lots of anecdotal evidence, which I know is not good of your own evidence, but we know that the traps are more likely, sorry, we know that the FBs are more likely to be false breaks than they are to be reversals. Why do we think that is? Why is that? Why is it more likely to be a false move than to be a full reversal?
Well, because a lot of people on that first break are going to be like trading breakouts. So a lot of people are going to be wanting to sell once that thing gets back there. So you have people having sell stops going with momentum, trying to go down with it. So that's triggering all them in. And then you have the trap. So all the supply and demand people are trying to trade the trap,
Yeah.
which are they have limit orders that are going to come up, try to tag them in, and then ultimately just take them out as well.
Yeah, yeah, fair. Is the market driven more by logic or emotion?
Emotion.
Why?
Retail traders,
Yeah.
as Danny was explaining, they uh, um why? Because they don't want to lose, or they want to try and catch the momentum. I mean, it's just, yeah, I think there's more emotion, because that was me. That's why I'm here. You can,
So the dumb money is definitely emotional, but the
yeah,
market's driven by the smart money, by the institutions. That's what's driving price. So
okay.
so when initial moves happen, the institutions are aware, and you're not wrong, Gary, by the way, you're not wrong, okay? The institutions are aware of how emotional traders generally are. So they understand that the most likely decision when these first moves happen is that people are going to start selling. So there's easy and quick pools of liquidity that they can ultimately go and grab, which are normally on the opposing sides because people will see this position and they'll set their stop losses above these levels. Okay. Another question for you. Do you think it takes more or less money to reverse the marketplace than to continue the marketplace?
Takes more money to reverse.
It takes more money to reverse. Exactly. Why?
Because you need as many buy orders as sell orders.
Not quite.
Money's already in the market, I suppose.
Money's already in the market. In what direction? In this example, where is the money already flowing?
Down.
Down.
In this market.
Uh,
Oh no, up.
Yeah. Okay. So bullish market right now.
Okay, so bullish
Yeah, I thought
Okay.
you were just talking about that range that we were
Yeah,
Yeah.
splitting.
no. Sorry, yeah, sorry. So in the
That's what I
overall
thought.
momentum of the marketplace is bullish right now. So are there more buyers or are there more sellers?
Buyers.
Buyers.
Buyers,
How do we make the market go down?
need more
Need more
sellers.
sellers. So what do we have to take out of the market?
so what was that?
Buyers.
We need to take out those buyers, right? Okay, we have to take out those buyers. We have to shake them out of the marketplace, which means from an institutional standpoint, it takes a lot more money to reverse the market than it does to continue the market. So when you have these first breaks, okay, they're most likely just liquidity grabs to take the market higher, to shake out those weak hands, to get those early sellers into the marketplace. So people place their stops here and here and here and here, which is why you'll see price react to a level like that, and then price see look, this is and when you start seeing this firsthand, you'll see it's not fucking coincidence, guys. There's a reason why all these positions there's a reason why all these positions have an impact on price. See how prices come up? Maybe not that one to be fair. Prices come up, taking liquidity from the left, rejected. Come up, taking liquidity from the left, rejected. Okay? That's because there's selling pressure. There's there's profits being taken at these levels. There's buyers in here. They come up to that they come up to that liquidity point and then they start shifting their positions, taking their positions out. Okay? If they're in a buy position, okay, they have to sell their position back to the marketplace, okay, which puts sell orders into the marketplace. That then triggers people into selling, okay, so the market jumps down a little bit, which triggers people into buying, okay, and it's just a constant power struggle, okay, and all we do is we just understand who's more likely to win in that power struggle. That's ultimately what's happening, okay, that's ultimately what's happening. So when these first breaks happen, these sweeps, these liquidity sweeps, okay, they are the first indication that we might be going higher. But the dumb money thinks it's the first indication we might be going lower. Okay, I'll show you a really interesting tool. Okay, and I use this quite a lot. So if we look at the market sentiment, that's not in a good position right now. Let's have a look at what's particularly momentous at the moment.
Are you looking for them graphs? Check the.
No, they were. It was at 50. Okay, here's a good example. Okay, so let's have a look at EURGBP. Would you say this market at the moment, ignore my trade, would you say this market is bullish or bearish?
Bullish.
Bullish.
Bullish, yeah. Okay. This is what's called market sentiment. So the MyFX book one's really good because the MyFX book is for those of you who don't know, it's a verified tracker for a trader. So you can log into your broker panel on MyFX book and it tracks all your stats. Okay. And it can understand how profitable you are over a long-term period. So what it collates is loads and loads of data. This is a perfect example of dumb money. This market is very clearly bullish, right?
Yeah.
Okay? Which means it's grabbing highs, grabbing highs, grabbing highs. What do you think dumb money does in these situations?
Sales.
Sells, right? They're constantly trying to catch the top. That's why I always tell you guys, you don't need to catch the top. They're constantly trying to catch the top. So they're trying to sell, they're trying to sell, they're trying to sell. What do you think the institutions and the smarter traders are doing? I don't want to call them smart money because smart money traders are a collection of dumb traders and it's really confusing. But what do you think the institutions are doing right now?
Buying.
So where's the market going?
Up.
Higher. Okay. And as it goes higher, what does the dumb money do?
Tries to sell it.
Tries to sell it. So if you look at the sentiment at EURGBP at the moment, 71% of their traders are going short. 71% of all the traders are going short. These are retail traders, by the way. Only 29% of them are going long. Okay? That means, so 71% of the Forex traders are currently going short with EURGBP with an average price, blah, blah, blah. Meanwhile, 29%, they normally give you some better metrics than that. Okay? So all of these fuckers are placing shitloads of buy orders, sell orders into the marketplace, and the institution's just gobbling it up. They're gobbling it up. Now, they're not wrong. Okay, the market is in a position where it's going to shift, but we have to wait for that shift to happen. And you can see it in play, right? This is very clearly buy, buy, buy. Okay, first break, I fell foul to that. As you know, if you were in my sessions earlier this week, my trade failed. Okay, Then we have a true break. We then have a failure to make a new high, and then we start actually breaking down. So now we're going short, and this market will start shifting. This sentiment's going to move. What will happen is, as we start going short, people are going to start buying it. And it's just mental. The psychology of it is just mental. And look, those of you who have traded for a little bit, you will have all been that trader. Every single one of you will have been in this position and you will have tried to sell that position and got swept out. Sell that position, then got swept out. Sell that position and got swept out. I can see some of you smiling because I know you've all been there. You've been that trader, right? Mark, you've
Yeah.
definitely been that trader. Gary's been that trader. Joe's been that trader. Just been like, this is the one, right? This is the one. It's definitely. Oh no, that one's failed. But this one is definitely going to go down on this one. Okay.
Yeah.
The way that we trade isn't particularly fucking technical, or I know there's a lot of things that you guys are gonna, are gonna learn that's gonna, open your eyes. But it's not particularly special. It's not particularly like scientific, other than the fact that we've done a lot of testing on it. It's just pure logic. We look for where the market is heading from a higher time frame perspective. We line up those time frames, one to the next, like Russian dolls. We get the monthly in line with the weekly, in line with the daily, and like these aren't penises, by the way. These are Russian dolls. Okay, monthly in line with the weekly. Okay, 4 hour, daily 4 hour. There's a lot of guys in here. Daily 4 hour, 15 minute, and then like the lower time frames. Okay, little midget ones. And we are just lining up those time frames, and that's basically all we got to do, and that's it, and that's it. And it's so simple when you think about it. Obviously, the trap side of it and the liquidity side of it is a bit more complicated. But the reason why I go into a lot of detail with the liquidity stuff is because I want you to really clearly understand it. Because I think logic is really important in trading. Okay. I'm sure you guys have felt sometimes a bit like, well, I'm doing this because I'm told it works, not because I understand why it works. Yeah. You've learned those strategies and be like, this guy has told me it works because they have said, or because he or she has said. But actually, hopefully, you guys, you January boot camps, and those of you who are more experienced, hopefully, even in those first few lessons, you were like, that actually makes a lot of sense. You have those moments where you're like, because that's how I felt when I learned these things, and I was just like, right, that actually now makes sense. I feel like I can work with this because there's logic and reasoning behind it that I can actually get on board with. And once you start, I think once you have that understanding, then it just fuels everything else. And like, I'll show you examples where we set a target for something to happen and it will tag it to the fucking pip. And it's not like this is not coincidence anymore. This is like, right, okay, there's something here, there's something logical here, and then that belief starts growing within you. And EURGBP we spoke about. Linley, I said put a post on Friday. This is why I always recommend you guys to keep up to date with the chats. Put a post up on Friday. I said to the group, what's the expectation next? Linny drew the expectation, and I traded what he drew. And that was my trade on EURGBP. Linny's got a really clear understanding of the strategy. He works it really, really well. And exactly what he drew, I traded, and it played out fantastically. This is logic with theory, and a lot of hours of collecting data. And so, and I said this to you guys, I think on Thursday, everything you need to make yourself a career in trading is right in this group. You don't need the boot camp. It's already in the November stuff. You guys are just getting it live. Everything you need is there, ready and waiting. Okay. And we've had myself and evidence who've done it, and other traders of evidence that have done it, and people getting themselves funded. It's right there. It's at your fingertips. It's just going to take a little bit of time and experience now to actually get it to put into action. And you're in the best place for it. You're in the best place for it because I genuinely believe what we have here, the structure of the mentorship, the way that we teach and relate. Remember, this is my background. This was my job for 15 years. I was a coach. This is what I did. And how we've built it now, the results that I'm seeing now, I'm genuinely so excited for. I'm going to make you guys into fucking beasts. And when I start getting some of you guys quit your jobs because of trading, it's just going to be the most amazing place to be and the most encouraging place to be. So I'm very excited for you all. I think I'm more excited than some of you lot. Anyway, like I said, Euro USD was a bit shit this week, so there wasn't really much. I kind of repurposed that session as just a bit of an education one, and that will happen sometimes. All right, I have very bad ADHD. Okay, and sometimes I will just set out to do something and I'll do the completely opposite. But what's quite good is that we'll always come back to where we started. Okay, I'm like a comedian at times. You might feel like I'm going off on a tangent, but I'll always remember where we came from, and I'll usually always come back to it. Anyway, right, time for boot camp. Time for boot camp, people. So I'm going to end this recording, and then I will send a link across to you, January people, for boot camp. Before I go, does anyone have any questions?
Hey, Check, can you go over that entry that you just had on Euro USD that we
Euro USD
entered?
one from Wednesday.
Yeah,
Yeah.
yeah. Real quick, just the entry.
Of course. Right. Let's have a look. So, Euro USD. I didn't take this trade. I didn't take this trade because I'm expecting sells. Okay. I'm in bearish market ranges, and although I have shifted, my overall market direction is bearish. And right now, I'm focusing on all of my timeframes in line. These are perfectly valid buys, by the way. Okay. But I am focusing now on more pairs, and I'm looking for basically having all of the stars aligned on my trade. Okay. These are trades that I would have taken, and me and Sam and I have two projects on this year. Okay. Project one is the stars are aligned strategy, where we take the strategy, we use a wider selection of pairs, and we use very high time frames and line them all up, monthly down to the 1 minute, basically. The second project that we have planned for later in the year is a refined intraday version, because we feel like we've got a bit of a hybrid at the moment. Okay. We're using higher time frames down with an intraday approach, and sometimes it gives the wrong entry signals. So that's what we're trying to refine for you guys. So, second project will be an intraday strategy where we will cut out more of the higher time frames. We'll cut out the weekly, we'll cut out the monthly, probably just use the hourlies down to see if we can really find, and possibly even go down to the seconds charts to see if we can really refine the strategy on a very low time frame so that you would only have one or two pairs. The same theory ultimately applies. But yeah, that's kind of project number two that we'll have complete hopefully by the summer. Okay, so we've got some cool new things. There'll be new courses coming with it, and obviously you guys who are already here will have access to anything we produce that's new. You guys will never have to pay anything else for it. Okay, your mentorship covers everything we do from here on out. So I didn't take this trade because I wasn't trading Euro USD. The purposes of the trade that I marked up were primarily for my backtesting journal. Okay, so I just want to make that clear first and foremost. The backtesting processes that I follow are cherry-picked trades. I want to find the best fucking trades that I can. I want them to look as good as they can. I want them to meet the strategy absolutely fucking perfectly so that I'm then more focused when I'm then in live markets. You've heard this analogy all the time. It's the same reason why a golfer goes down the driving range to practice their swing. Okay, they're cutting out those variables. They're putting themselves in a situation where they can effectively cherry pick, right? They can put the ball on the tee. There's no wind. They're in a nice shelter, and they can just hit as many balls as they can over and over again. Okay, they do that not to simulate what a golf course feels like. They do that so that when they're on the golf course, they can simulate what that feels like. Okay, this is the same principle. So the market on the hourly time frame was bullish. Okay, if we were ignoring the daily, weekly, monthly, okay, we would just be trading this market bullish right now, and we wouldn't be factoring in anything else. Okay, we had quite a bullish Monday, which was unusual for Monday, but we had an unusual week with the inauguration and a bank holiday. And we had a big, bold, bullish market move, which took out the previous week's high and gave us a continuation of the bullish market conditions. Overnight, the dollar opened and we had a massive gap. Now, although that looks like a big bearish candle, that is actually a gap. If you go over to the DXY, for example, and we have a look at my DXY doesn't do it. If you look at some DXYs, however, there's a big gap on here. Okay,
The Oanda broker does it.
Is it on Oanda? Is it?
Yeah.
They have an Owen.
You could probably look on your USD and on
No, mine
Oanda.
is an Oanda.
Oh, really?
Yeah. Let's look at FXCM because that's normally a bit wacky. When was it? Tuesday? No, it's not done on there.
FXCM, that's what I use, and there's never any gaps on it. But Oanda, I've
One
always
that always has
gaps.
gaps on. Can't remember which one it is. Tuesday. I mean, that's barely. No, not that one either. Is it Ice has gaps on? One of them shit has gaps on all the time. I don't know. Anyway, I saw a gap somewhere. Or it might just been a big move in price. I can't remember now. It's effectively the same thing anyway. Basically, when you see a gap, it just means that the market has opened at a different location to where it closed, typically. So it creates a gap in price, an inefficiency, an imbalance, and it has an attractive quality to the markets. So market moved really quickly down. We started to correct overnight, and then we started to make some bearish structure, bearish structure, bearish structure, and then we took out this liquidity level here from both the Asia low and Monday London close, if you want to call that a liquidity point. It's a spike. There's going to be stops sat below it, is all you need to know. Price then came and swept that level. We created no new structure. We pulled back. We had another sweep. We created no new structure. But then we failed to make a new low, which is what? What does that tell us?
Or buying pressures coming in the market.
Yeah, that buyers could be coming in the market because what could a failure to make a new low also be? Someone other than Danny? So what could this also be if it's not buyers coming into the marketplace? So
Trap or something.
it could also just be what we call a complex pullback, where we've just got an indecision in the marketplace, okay? And that actually we're still going to continue down, okay? In this case, it was a failure to make a new low. What it's done is it's given us then our first break, okay? So when we have that failure to make a new low at a liquidity area, that can give us a first break. If we had one of these, any good
So
examples?
check if it fails to make a new low like it just did, but then broke that structure right there. That you would also consider that as a first break.
Correct, because it's at a liquidity point.
Gotcha.
Okay, it's at a liquidity point. It's not a first break that I take a trade off, typically, although you
Yeah,
could have
yeah.
done in this example. It would be a very high risk play because it could also be a complex pullback. So pullbacks don't always have to be just one move up, guys, basically. Is the point I'm making is they don't have to just be one move up. This is a good example. This is a complex pullback. That's a failure to make a new low. You could argue that that's a shift. What's the difference between that and that? I'm going to go with you just because you haven't got your camera on. I'm going to pick on you.
All right. Sorry, say that again.
So what's the difference between this, which is, as you can see, is a complex pullback, and this structure, which is basically the same, because it's still failed to make a new low, okay? And therefore, it's still technically giving us a first break. Why is this section of price different to this section of price?
Um, what section?
What's significant about this move in terms of its location? What has it done?
Oh, is it in
What's it taken?
is it in discount?
Yeah, they're both in discount.
Oh, right, yeah. What's that taking there?
On
Sorry.
your chart right in front of you. Anyone else got it?
Yeah, we took the low on.
Liquidity. Okay.
Yeah.
So this liquidity point here, you could argue was taken, but it's an insignificant liquidity. Okay, and you'll learn about this. There's significant liquidity, there's insignificant liquidity, what we call key liquidity. So a random spike in the middle of nowhere outside of a key session, it's not a liquidity point that I'm bothered about. It's not an external liquidity point, it's internal to this range. I'm not fussed about it. This, however, is the low of Asia. It's a significant low in the marketplace because it's a low of an entire trading session. Okay. This is different because this hasn't taken any significant liquidity. So although it's the exact same setup, that's not something that I would trade. And it's exactly the reason why, if you have a failure to make a new low first break, you should wait for the true break to occur before you can take a trade. Okay. If you wait for the true break to occur, you then add, the confluence is in your favor. This trade's a perfect example. Now, there was a trade set up there. I haven't marked it up because I personally wouldn't have taken it. We have a first break, we have a true break, which confirms after a liquidity sweep that we've shifted back in line with the 1 hour time frame or the 4 hour time frame, whatever time frame we want. It's bullish, as you can see. We then get big old push, big old push, big old push, and then we get an MSU entry. And it's really that simple. MSU is actually an MSU1 because we used the low to the left rather than the low of the sweep. Okay, so it's a nice MSU1. Okay, and then just trade it there. It's as simple as that, Danny. Shifting market liquidity, waiting for an MSU. And again,
I get all that. The part that I'm questioning about is the entry of that MSU, because for me, I'm looking for the MSU to take the true break high or low.
So the MSU and the FBTB are two separate things. So it doesn't have to take the low of the true break. So you can have an MSU completely independently of a shift of market structure. Sometimes your MSU will become the shift of market structure. But sometimes,
yeah, I think that's what I've been trading, the MSU when it shifts, like exactly when it shifts.
You can take that, but in this example, you would have missed out getting into the trade.
Exactly, and I think that's my question, because like I didn't know how you actually got into that, because I personally would have missed that.
Yeah,
completely.
So you can see I nearly did miss it. I nearly did miss it technically because it moved quite far up, and I had to wait until the 230 pullback. I had to wait until the 230 pullback to actually get into the trade, and the MSU sweep is actually there. So I had to wait for the 230 pullback to actually get into the trade. So, it was nearly a missed trade. I wouldn't have been confident trading in this section, although there was an MSU there. But yeah, the FB and the TB, they are not mutually exclusive. They are mutually exclusive. They're one of those, basically. You can have an FB and a TB, and then you can have an MSU afterwards. The MSU can also create the FB and the TB.
Gotcha.
Cool.
So what makes your entry there an MSU? What are we looking at there that makes that an MSU?
This. Ooh, not that. This. That.
Right.
Continuation. Pullback.
Pullback.
Continuation. Manipulation. Hence the name manipulation setup.
Just the same as like a low time frame false break as well, right? It creates a little trap.
Exactly what it is.
That's how I see them.
Up there. And that's why the false break trap is the foundation of what we do here. Okay? Because that on a higher time frame is just an FB with a trap at the top. FB here, trap at the top.
Right.
Hang on.
And that could have happened anywhere on that bullish bit of structure you've got before there. You're just waiting. Just waiting for that to occur at some point.
Yeah, you would normally. I mean, there's an argument to say there's what's called a hidden MSU in here. There's a hidden MSU in here. I like to use them structurally. I like them to be nice and clean. I like there to be a very clear pullback and sweep, so it gives me a very clear trap to trade into. And
so where your cursor is right now, you've just circled it. Why is that not an MSU? Oh, hang on, I'll draw your screen. Yeah, right there. Those two.
We hadn't had
so it comes up, pulls back, and then. Ah, right, okay.
On the 5-minute time frame, which is what I like to use for my market structure shifts, we'd only had a first break. The true break didn't come until after here. This one here I'd marked up was an internal false break or first break and an internal true break. So you'd have to acknowledge the fact that that's internal, which, to be fair, if your timeframes are aligned, is an acceptable entry, but it's just not as confirmed as an FB and a TB. Okay. So I'm kind of, like I said, in these, when I do my back test, I'm cherry picking what I would class as the very best version of the entry. But there's multiple options. You could have entered a risk entry here. You could have entered an internal version of it here. In fact, no, you couldn't have because you didn't get the TB until up here. So
Right.
probably your next entry would have been here on a very low time frame. Maybe here on a very low time frame. Okay, those are your manipulations. But that one is, as you can see, the clear one. Why is that clearer? What is it about that move that's different to that and that move? We spoke about this in boot camp this week.
Volume.
Yeah, look at that candle.
There's a big
Yeah, it's more of an institutional candle. It's got
Yeah.
imbalance. It's got momentum. It's got pressure.
Yeah,
the
quick
imbalance
sweep
here,
up, quick sweep
right?
down.
You've got the imbalance from there to there. That's an imbalance candle. Okay. There's only one group of people or one, I don't know what to call them. In our 4 classes of traders, there's only one class that's able to make a move like that, and it's institutions. Okay. That is huge selling pressure to trick people after this liquidity sweep into selling the marketplace. That's all that's happening. Brings down money into the marketplace, sets a trap, and then we can trade into that trap. All right. Right. Hopefully that answers your question. I'm very, very late for boot camp, and I know that most of you boot campers are here, but we also need to get cracked on. So apologies, I'm gonna have to end this session. But that was a good question, Danny, and hopefully that's clarified a lot of things for you. I'm gonna
Thank you.
get off my charts, and I will send a new Zoom link out for the boot camp people in like 5 minutes time. All right.
Yeah, I
All
need
right.
to try
Cool. Cheers, guys. See you in a minute.
Cheers.
See you later.